Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our Monday buys video. So every week I go over the M1 Finance Roth IRA account. I go over what cash we have sitting in the account. What is our activity from last week's stocks? What stocks did we buy? What stocks paid off dividends? Did they reinvest anywhere? Or are they sitting in cash? And then we're going to go ahead and go over what stocks we are buying this week on Monday. So if you are brand new to the channel, have not yet subscribed, hit that subscribe button below. I cover the stock market, dividends, entrepreneurship, and real estate. If you're interested in any of those, hit that subscribe button. If you do enjoy the video, find it helpful, hit that thumbs up. And if you have any comments, questions, are you buying any stocks this week? Drop them in the comment section below, and let's go ahead and get into the video. So currently, I have $4.42 sitting in cash. So I did get paid out some dividends last week. If we take a look here at the activity, we have some dividends that are paid out, so that's just kind of stays in cash currently. So Cisco last week paid us out $4.43, and then we had our Monday buy. So 7 days ago, it's currently about 12:30 in the morning here on Monday. So last week, we didn't have any dividends really get paid out besides Cisco, and on Monday we deposited our $115.38, and we were able to buy AbbVie for $78.87 down. We bought about 0.44338 shares of that one. So we put $34.97 into AbbVie and Medtronic, and we put $45.46 into Walgreens there. So you can kind of see all the shares and the per share price here that we purchased those shares. So we do have that $4.42 sitting in the account. So let's go ahead and add our math here. So we have $115.38 that we add in every week, and we have $4.42. So we're going to be adding and averaging in about $119.80 into the market this week. Now, I've already taken a look here at the stock market. This is the 1 week performance for last week's the S&P 500. Now, a couple stocks out there that I am currently invested in. If we just take a look here at the overall performance and sort this by stocks that have been positive or negative, we can see Cisco up at the top. They paid out over $4 of dividends, plus they're up nearly $200 in the portfolio overall. So Cisco has been a overperforming company there. Now, my worst performing companies here are Altria and AbbVie. Now, these two, their equity is about comfortable where I want them at. They're in that $600 range. So AT&T, AbbVie, and Altria are essentially in that $500-$600 range. Now, I do have a few of these here: Walgreens, Caterpillars, Cardinal Health, Triple M, that are also in the negative, and you can see that their equity is much off. It's about $200-$300 off from the other companies here that I've been averaging into in the recent weeks and months. So Triple M is one that just took a dive last week. It's very rare that you see Triple M here take a loss this big. If we take a look at the 1 year performance for Triple M, and we go take a look at the 1 year performance, there's really a lot of, not like a whole lot of opportunities out there for being able to buy this stock at such a price here at below $200, and also be able to get a yield on cost of 3%. So here, this stock is currently offering a, right there, 3.1 starting dividend yield on a very strong conglomerate and industrial company. It has its mitts in a whole bunch of different, business groups, going from industrial, safety, graphics, healthcare, electronic, energy, consumer. It is mixed out and gets a lot of its revenue, 60% of its revenue here from within the United States. Now, this is one company here that I have been wanting to kind of average into my portfolio a little bit more. Another has been Walgreens. Walgreens has been negative almost every week here for the past few weeks. I do believe here eventually Walgreens will hit sort of like a bottoming out point, or it'll start to not fall as much, and that's fine. If it continues to fall just a little bit more and more, that's fine. Walgreens is still at $300 of equity when the rest of my portfolio is in the $500 or $600 range. So that's fine that I'm kind of averaging a little bit every week at this lowering position, or as the stock continues to kind of trend down lower, that just kind of gives me a better entry point. So far, my two here that I have been wanting to add into are Walgreens and Triple M. Now, my third pick for the week is currently Cardinal Health. Cardinal Health is going to be my third pick here. This one, it was a bit spotty last week when I was checking out its revenue, its financials essentially. I was looking at its financials and its return on invested capital. I looked at it a little bit further and what they're kind of working into the future as they have a lot of little stores throughout the United States. They're trying to turn them into urgent care, and I believe it's going to do really well here in the upcoming future within the next 6 to a year or more. That time frame. It's in the future here. So that's the third one, and then my very last one, Ultra, not quite sitting at that $600 range. We can see here overall we're down $50 in this specific stock, and that's fine. I know I've gone and got paid out roughly $50 from this company just in dividends. So averaging down at Ultra as they're kind of getting into not just smokeless devices. They just bought up Juul. They've also started to get into the marijuana industry, and they already have their foot in a way that they're able to manufacture and create all their cigarettes that they've used for, what's their other company, Philip Morris. So I believe with their current sort of investments in the past, is going to be able to help them grow and push themselves further than they currently are into the future. And being down currently negative 11.85, this is all temporarily. Going into the future in the next 5-10 years, they're not going anywhere. They're going to be around. Yes, they're trying to enable a rule that anyone under 21 will not be able to buy cigarettes, but that's only going to be able to play so much of a there's always different. It's just like alcohol. Alcohol isn't really legal below the age of 21 yet. It happens. So we shall see how this one kind of plays out into the future here. So I am going to be buying up 4 companies this week. So we're going to go ahead and divide one. We'll just say 120 by 4. And that's going to be about $30 into all of these positions. So number 1, Ultra, we're going to go ahead, select the stock, go ahead and do a buy, sell, select buy, and I'm just going to go ahead and punch in $30 here and confirm. And our next company here that we're going to be purchasing is Triple M. So we go back over here. I can actually just go ahead and sort this by the negative, and that's going to show it a little bit easier. We're going to go ahead and do Walgreens here, $30, and continue and confirm. And we're also going to go ahead and select Cardinal Health and buy, sell. And we're going to go ahead and do $30 into this one as well, and confirm and continue. Continue and confirm. And then our very last company here that we are going to be purchasing is Triple M. And again, I'm just going to go ahead and put in $30 into this specific stock. Now, I did overshoot from $115.38 plus $4.42. I don't believe I should have any dividends coming in on Monday, but I'd rather overshoot a little bit than undershoot, because that way I have all my cash invested on Monday. Continuing on into the upcoming weeks, I always have brand new equity moving into the market, allowing me to average down on these specific stocks, which lowers my unit cost across the board on all these stocks. It also increases my yield on cost, and it also increases my dividend income in the future. So going into the 2019 and beyond, these companies are going to continue to grow and pay out dividends. So Johnson & Johnson, for example, has just increased their dividend. This one got slammed just a few weeks ago. Johnson & Johnson was down more than 10% in just a very short amount of time here. Let's go back 1 year. We're going to see here Johnson & Johnson had a pretty strong uptrend up until that whole fiasco with the turmeric, or I believe it was turmeric. And we could see here that Johnson & Johnson fell overnight 10%. I started buying up Johnson & Johnson at this point when it was down in the negative, and you can see it recovered here within from December until February. It took about a month or so for the whole recovery process, and now they're back up at all-time highs, chugging along into the future for Johnson & Johnson. Plus, they just increased their dividend by, I believe, like 5 or 6%. So that is the whole process of continuing to buy and hold and dollar cost average into stocks that are currently negative, because they do offer that better starting yield and so on. So that is all I wanted to cover in today's video. So again, quick recap: the 4 companies that we're going to be buying this Monday are Altria, Walgreens, Cardinal Health, and Triple M. They're all negative in the portfolio. That allows me to lower my unit cost and so on. So that is it. What stocks are you guys buying out in your portfolios? Let me know in the comment section below. I saw a lot of investors out there looking to begin buying Apple. I've done a whole video covering why I decided to sell a large portion of my Apple. You can see here I am still holding Apple here within this portfolio. If we can find it here, it's actually the largest equity portion of this portfolio. Plus, I sold off about another couple close to like 10,000 in the other portfolio. So I do hold still a good amount of Apple. So I'm not selling it all the way out there. But that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.